Warning, this is all financial advice. You can invest in any way that will make you feel comfortable. This is just a full breakdown of the stock to help you invest into a company that will help you grow your portfolio for the long term. Thank you.
It's time to hone your skills. You'll certainly need it.
Hello guys, my name is Kool-Aid Man 100X. Welcome to Black Money. How you guys doing? Black people, listen, we're going to be reviewing the Marriott. Everybody, grandparents go there, family functions and everything. So we're going to be looking into what makes Marriott profitable. Let's look behind and under the hood. So the first thing we're going to look at is their charge within the 6 months to 1 year to 5 year or max. So cut the time here. We're just going to go a year into. So they actually did pretty good as they peak here around $378. Another peak here around $400. And it was $400 a share, which is crazy. But they're still peaking in a difference of $300. So they're in the $300 range of their full company load, which is pretty decent, I would say. So let's look at the 5 year gap, which is pretty decent. They still kept it the same. So they actually high peak wasn't at 5 years, they're 300 max. Actually did good. But can you imagine buying Marriott when it was $8 in 1995? Crazy. Crazy work we living in. So we're gonna go to the financials and let's jump under the hood. So we're gonna go to the cash flow here. For the net income, they're making around 728 mil for 45. They took a big dip in December 2025. 648, they actually came out the hole a little bit and then back in the 766 mil range. Decent, but overall, it costs $1.9 billion to actually run this operation, which is crazy. 829, they took a dip there. 858, so they're back at 948. So they're actually lowering their operation because it did cost them a fortune here, which is around 1.9 billion. So they actually took a little bit of a dip now, but they had 948, so they're probably creeping back up in operations. So I guess you gotta pay more people to run it, It's kind of weird, but it is what it is. Cash from inventories, change in inventories, no, which is crazy. They usually it's a hotel, so I would see this will be here, but they don't have it. Interesting. But we're gonna get a little deeper. Cash from investing, negative. So they actually depleted their investing cash. So pretty much they're investing into Marriott. So Marriott is their investment. So pretty much that's the company when it comes to investing. Anytime they got cash from investing, that means they're not investing outside of the company. They're investing within the company. So they're putting more into it, or if not, buying their own shares of their company. You'd be surprised what these companies do behind closed doors just to keep themselves open. So the next one is cash from finance. Now this is going to be interesting. Let's go to the cash from finance here. Cash from financing, negative 600, negative 970, negative 612, negative 915. So they're still in the hole. So financing. Now, what's really crazy about this, are they financing these hotels to keep them open to make the profit total? So some of these hotel buildings that you see in Marriott are not Marriott. They're not their own Marriott. So, picture a hotel company as like a timeshare. So none of them own the property, but they own what's in it. So basically this is a profit margin company, as you see here. So cash from financing is pretty high. So they financing these, mortgages, stuff like that. They're financing stuff in these hotels. So ain't no telling what they're financing. So we actually figured that out. So free cash flow. That's just going to tell me where they at. 366, 5, 492, 6, 570, which is not good. Unleveraged cash, which is 712, 225, which is very not good because your net here is 762. So cut that in half. This is what they're actually making, if not lower. So as you see here, the bound of them taking a big hit like this is a big problem. So man, they ain't really profiting. They just profiting enough to pay the investors. which I might say, so I meant to say this at the beginning, I always forget this. Do this company pay dividends, which is surprising that they do. Marriott does pay dividends, and they pay a solely of $2.92, and they pay it quarterly, which is crazy. As you see here, they pay a quarterly dividend of a 28% payout with an annual dividend of $2.92. Now, this is what interests me. The growth is 7.69. They're still growing in dividends, which is crazy, by the way. And it's a decent dividend. You get 73 cents, 67 cents, 67 cents, 63. So they've been in base. So they actually been increasing in their dividends. Their last payment was September 30th, 2026. And, you know, that's their dividend payment. Now, imagine making 73 cents quarterly and paying this for the stock. Really not a good investment. So, but last but not least, we're going to the bullish and bearish view of the company. So this is actually explaining the main source of what the heck is going on and what the heck. Yo, what's up, guys? This your boy Kool-Aid Man 100X. I want you to hit the link in the description below for my zero investment books. We have a quick sale going on for $7. Link will be in the description below or in the comments below as well, so you can get a chance to get the $7 deal and other things that you want to learn how to invest and take your investing to the next level. So I hope y'all enjoy. I'm gonna catch you guys there. They're trying to do. So yeah, we're actually going to be looking into that. Marriott is a free driven. I don't get that. It's a hotel. Assets license model continue to deliver the double tight digit growth, fee growth, and supporting the co-brand credit card fees and resident branding fees, and increasingly driving earnings independent from rail swings and management raised by full year guidance, with the EBITDA and EPS beating the estimate, suggesting that rail showdown is trajectory where it's structured. I don't get it. Is this because of the epidemic? Because people are living in hotels now instead of buying homes and renting? So they're taking on the credit card fees and car fees. That might be a problem. The Marriott Q3 outlook of the short term in the Middle East and travel demands. The company has missed a Q2 revenue. I figured that, and ain't nobody traveling. Well, you kind of know what took a dip with that too. If y'all really want to look into that, which is crazy, I might do a breakdown of that. Is Spirit Airlines. Spirit Airlines took away a lot of the profit from these hotels because people was taking random vacations, spending $200-300 on flights, and you can get a hotel. So that's actually killing their profit because they took the low bearing of the flights away from other countries and other places they could have go with Spirit. Spirit was the pinnacle of, you know, these travel places that you want to go to. So that brings into for the revenue estimate, the analyzed flag of projection of the rail declare 2 and 6 of border demand to slow down, then temporary bib and pressure of stock below technical level. So yeah, just like I said, there's a lot of people is not getting hotels or really traveling like that, because I think the main source is because Spirit Airlines, you could travel to these different places and different companies. And when Marriott was available, that's where they were renting at. That's where they were booking. So now that the bookings are slowing down, now they're taking on bigger, heavy credit card fees from local that sometimes can't even afford it, or either sometimes got to take the lower fee, or transaction fees, because they have to do that too as well. So that comes into play. So they're not getting that rush of clientele to actually make what they want to do. So that comes into play as well once you really break that down, I would say. But yeah, but we got that out the way. We're going to be going to the balance sheet. This is where it gets interesting. So we got those two out the way. So the balance sheet for the inventory, which is we go to the inventory. They don't have any inventory, which is interesting to me. Why they don't have any inventory? Is you're a hotel. I don't get that. The total current assets is 4.11 billion. Just like I said, if you see everything a common number, this is what I was saying for the total current assets. They're buying their own shares of their company. Now, a lot of people do this to actually own back their company so they can take out the shareholders. So if you're investing in theirs and they're buying shares back, that's what they're doing, to actually get more full control over their company and take more of the full profit instead of paying you out dividends, or if not, growth in stock. So yeah, that comes down into the play as well. Prepaid expenses. So prepaid expenses, 332, 317, 374. 26. So it cost you a prepaid expense to run this company Marriott, which is 426 million. That's crazy. But to each his own. Tony, this is where it gets. It costs. This is the incurred expenses. This is what they're getting every week, every month, every day. It costs 2.93, 277, 303, 295. They actually got lower, so they actually trying to pay off, but they might creep back up to that $3 billion. So it's actually cost them more to run all these Marriotts. That's crazy. So long-term assets. Do they even have any long-term assets? It's crazy because the debt term, you can see it's in the billions. Ooh, Lord. That's not good. Liability. For the total other, I would say they took a big hit. Long-term leases, debts, total other liabilities is garbage. Total that. Total accounts payable. Oof. Total assets 700, 799, 800. So their long-term assets is Marriott. So this is what they're investing in. So right now they at 833. So they're buying shares and making profit off of what they actually put into it. The total assets is 27. This is Marriott. This whole thing is Marriott. 27, 28, 29. They're trying to get back their company. So to actually make a profit. Because they ain't profiting. Yeah, let's look at the earnings. The earnings, I would say, is kind of decent, if I might add, but I doubt it if you really think about it. But I don't know. But God, yeah, never mind. 71% hit. This is in revenue surprise. But the overall revenue 1.2.3 point, but they paying all this in expenses. That's why their rev surprise is very low, so that comes into play too as well. So I would say they're not profiting anything. They're just profiting to pay either the shareholders, the accrued expenses, and the overall operation of the company of Marriott. This is their debt. This is not their profit. Just saying. But interesting. When you're seeing this type of thing here, and we can go to the analyze consensus here, which is, is to buy. They do say it is profitable, but do you really want to buy this company at $354.63? So what I like to do here is I forgot to take it out. I think calculator. I like to do, let's take a calculator, right? Take my little calculator, right? Then I'll always time this by 50 shares. So what I'll do here is put 354.83 times 50 shares. It'll cost you $17,741.50 to have 50 shares of Marriott. Then remember, you're making a dividend, if I'm not mistaken, of almost 73 cents paying this. So if you calculate all of that, so let's say if you take 73, what's that? You're gonna say 73 cents. So we're gonna put 73 cents times 50. You'll make $36.50. So do you really think Marriott is a good investment? My personal opinion is no. But if you're looking for something to invest in long term, I would say look for Marriott in an ETF or an index fund. That way you'll have more stocks to cover any losses you have with Marriott. Something to invest in if you're into the hotel, situation, but overall just investing into them solely, no. Even though they had a 4,000% increase max, no. Because you can see what they do in a year, which is decent, but they only went up 2%. So it's just a day. 6 months, 23%. So Overall, Marriott is going to be there, but if you're looking for something to invest in solely, no. ETF index, yes. So that's pretty much it. So I hope you enjoyed this video. I'm going to catch you guys in the next one.